dropping in. Let me get some screen share set up as well.
Hey, Pete.
You guys hear me?
Hey, what's going on,
Yeah.
Pete? Hey.
First time I'm hearing your voice.
Oh, yeah?
Yeah.
I'm a singer. I don't want me to start singing for you.
Oh, what's your go-to?
You could. That could be our background music.
Yeah, right.
You got a go-to song, like karaoke song that always crushes?
Oh, like a virgin? Yeah.
Like a virgin?
Yeah. I haven't seen karaoke like maybe, I can't even say how many years. It's older than you guys are.
Well, it sounds like you got to get back out there. You know, you could do like the private room ones where it's
exactly.
Like you don't have to do it in front of
private
everybody.
dancer type.
Yeah, you
private dancers and shit.
Yeah, the back room. You got people stuff like dollar bills into your pants while you're singing.
Yeah.
No big deal.
Oh, that'd be nice.
Dollar bills, yeah.
Singles, dude.
Hey, that's $2 bills actually.
Account for inflation.
Yeah, exactly. No, I'm just listening to you guys, and I'm like in the middle of changing my water pump in my truck.
Oh.
And kind of tinkering with that while I listen in on this.
Nice, let's do it.
Stuff.
Well, hopefully you learned something today.
I'm going to share my screen here too. Let's see.
Oh, should I also share?
Yeah, you want to share your screen? I'm just popping in on, let's see, where am I at? RBDEX right now, the perpetual futures contract market.
Okay,
let's see. Earlier when we were testing out this stream, I always started with a quick short sell based on like just looking at the chart for a few minutes. Looks like I'm up 0.78%, baby. Not quite ready to act on it.
So when you guys increase the dollar amount, like of your investments, does that like drop the amount of like your leverage, or?
It depends on like which platform you're using, but you can do like basically any dollar amount and then scale it with your leverage. So like this account that I have on screen right now, I have funded with like $75. So I could create, I think, up to $75 worth, plus 200x leverage. So I could create a position worth, like what is that worth? 200x plus, let's see, what do I have left here? I guess 30 that I have left to actually take a position in. So then you would scale, basically the percentage is always a function of the position. It doesn't matter how much leverage you put in. If you did $100,000 as your base and still did 10x leverage, you would still be up. Like here, 5x I did on $10. So this is $50 position. If this is $100, it would still be up 0.7%. So instead of 8 cents, it'd be 80 cents. If it was 1,000, that'd be up, $8. And so yeah, it's.
So I guess so the stop loss is under $75.
For this one, yeah. Let's see. This one I have a stop loss set at 65. 65 cents on Matic. So since I took a short position, let me actually look at the Matic chart. Here we go. So since I took a short position on Matic, I set my stop loss kind of above here where we were hitting. I'm just on the 15-minute chart. So I was looking at Matic. Seeing Matic in the downtrend, moving down. Daily chart looks like crap. Still very much bearish. 4 hour starting to get to the like overbought range and being rejected at the strength band. And then the 1 hour is flipping bear. So I'm like, okay, based on all that, and then on the 15-minute, like this is where we were at. We were like, this was maybe like 2 hours ago or something, so probably around here. It was like constantly closing below the band. And I was like, okay, and we were still kind of like having plenty of room down. Right now, I don't think I would open a short immediately just because we're at the 15 minutes. It looks like we're going to have an opportunity to open it a little bit higher. And since I'm using 200x leverage, I don't have much room to not call the top. But yeah, that was,
yeah.
And then that's also when you look here, I set the stop loss at 65. So based again on this chart here on the 15-minute, it was like, okay, I'm opening the short and then basing my stop losses based on that. But that is kind of slow moving right now.
some platforms don't allow you to add collateral to push up your liquidation.
So
like
I don't think this one lets you. I'm new to this one.
Yeah, like GMX does. I don't think Cap or Gains they have that, right, Max?
I'll go to GMX too. Yeah, let's jump on. Let's try a few of these things. Show them off here, because each of them have kind of different allotments that they let you do, but all of them effectively have the same what is it, like fundamentals. They all kind of operate in the same way. But the big exchanges that I use are DYDX, GMX, Gains Network, and then the one I was just on here is RBDX. This launched yesterday, so this is like brand new. I was still getting familiar with this one. This one has a different way of calculating your cross-platform liquidity here. Instead of being isolated to your asset that you're using as collateral, you can actually use multiple assets as collateral as well as multiple open positions. So you could have like a long position acting as collateral for a short position, which also allows your short position to get a loss greater than 100%. I don't fuck with that. Like first thing I did was change this to single asset and then change this from cross to isolated. I'm not trying to fuck with that kind of stuff. Like it's cool that you can do it, but it requires like very specific strategies, and you need to be so on top of what you're trying to do. It's honestly, it's absurd to me that was the default. Like,
nice. Yeah. Welcome. We got another person joining in.
But yeah. I think it's probably not a bad idea to start at kind of the beginning here before we dive into like looking at a chart, trying to take a position. The very first thing that I'm going to do before I get into any of that is, let's see if I click MetaMask. Okay, it does show up. The first thing I want to do is I want to, fund my wallet so I can actually do any of this stuff. Because all of these protocols that I'm using, like DYDX, this is GMX, Gains Network, RBDEX is the brand new like market. There's also like Open Ocean. There's many different platforms you can use to do perpetual trading or just leverage trading in general directly from your wallet. But all of them have one thing in common, which is you're doing it directly from your wallet. So the first thing you need is to actually have some funds on the wallet, and the best way to do that is to use a second layer rather than Ethereum main layer. So, for example, I also just shared this in our come on, I'm not trying to do a bunch of captchas.
I'm just saying a stop
Uniswap
loss
just.
By the way, are we recording this?
Yeah, I started recording. Yeah.
Okay, cool.
Yeah. So do you see Uniswap announced they're doing V4 liquidity? I'm super excited for that.
Yeah, I saw that.
That's I have to actually read into their GitHubs and see like what the like implementation is, but they just announced like a sneak peek of it today. Either way, most of the crypto market stuff happens, on the Ethereum network. So by default, we always use I always use MetaMask wallet. And then if you're unfamiliar with MetaMask, it's like a browser extension, like what I have right here. And the browser extension opens up, by default, you have it set to Ethereum. The little color wheel up here lets you basically organize a bunch of different wallets. So you can see mine has, multiple wallets on them. Some of them are hot wallets that are just, on this computer. Most of them are like these Trezor 1, 2, 3. Those are like hardware wallets where I actually have a hardware device that is queried every time I do a transaction. I have to also query the hardware device for the transaction to broadcast. So this is like MetaMask is like the wallet, like browser extension that I use for all of this. And then by default, you get, if you just installed MetaMask, you set it up for the first time, you have your Ethereum mainnet here. And then if you go down here to add networks, you can see I have a bunch of networks already. If you go down to add networks, it will have a list of networks you don't already have. So today we're using the Arbitrum layer 2 for Ethereum. And so if you don't already have Arbitrum on your MetaMask, you can just click add here. For example, I don't have Optimism, so I would just say add. And it'll say, do you want to add this? And then you say approve. Once it's done that, I said dismiss. But now when if I'm in my wallet, if I click the drop down, now you'll see optimism has been added. And so to toggle between any of the blockchains, so these are all EVM, which is Ethereum virtual machine compatible blockchains, that they all work with MetaMask. So I can use Harmony, Binance Chain. This is Kronos, is the crypto.com blockchain. I have 2 versions of that one. Polygon, Arbitrum. I have 2 versions of Arbitrum. You don't need to, so you can always just delete them. The reason I have 2 is because, sometimes I'll go to a website like this, like here's GMX, I'll say connect wallet, I'll say MetaMask, and it says, hey, do you want to switch to Arbitrum? Yeah, switch. And then it's like, rather than asking me to allow, sometimes it'll be like, do you want me to add the network so you can switch? That's why I had multiple ones in there. But now that I have, a wallet and I have it on, I have added Arbitrum or any of the other chains that we're going to use. So like I said, if you don't already have Arbitrum, add Arbitrum like this. And one more time, you just click the drop down, click add network, and then on the add network screen, you choose Arbitrum and just click add. So once you have Arbitrum added, the next step would be to actually get some of your cryptocurrency onto the Arbitrum blockchain, which, if I have a wallet, for example, here I'm on, let's say, Ethereum, and I look at, like this wallet here, I have, 0.2 Ethereum on this wallet. If I take the same wallet, which you can tell is the same wallet by looking at the little icon in the top right, and now I switch over to, Arbitrum, my balance is different. You see, I no longer have 0.2 ETH. I now have a different amount of Ethereum. The reason for that is because this is showing me the balance that I have on the Arbitrum blockchain, so on the Arbitrum second layer. And so this wallet, while the address is the same, you see the address up here, the address is going to be the same on every one of these different chains. The balance, though, will be different because these are all different crypto blockchain environments. So even if I go over to like here, Polygon, you can see, now it's changed from ETH to Matic. So I have 32 Matic in this wallet. If I go to like Kronos, you'll see, there's the CRO token is the the gas paying token for this network, and that's what the balance is in this wallet. So first things first, we're using Arbitrum right now, and I want to move some of my money from the Ethereum network over into the Arbitrum network. The most straightforward way to do it is going to be directly from inside MetaMask. Now they actually recently added this bridge. It works really well. It's pretty quick.
which is kind of cool.
So the way I could do that now is if I have my wallet, I just click bridge. It'll open it up in its own little tab here, and then super straightforward. I'd connect my MetaMask to the wallet that I want to use. So if you have multiple wallets, choose the one that you're using. The reason that I use multiple wallets is for multiple different blockchain interactions. So like this one, for example, I use to do a lot of DeFi trading stuff. Like this one I'll use for like NFT projects. If I'm trying to collect an NFT, I'm not in the market or in the business of signing transactions with a wallet to claim an NFT or to do some bullshit that also has exposure to, assets in a DeFi protocol. So it's definitely good practice to have multiple wallets for different things. So right now I'm going to choose this wallet.
Like the website, or unsure of that app, or
yeah, especially if you're using like you saw I was showing off like this futures like this market went live 2 days ago. I'm only using that with a fresh wallet, because no matter what, I don't know, like even though the obviously the contracts have been audited and have passed the audit information looks good, nothing tests things as well as time. Time tested and value tested is what I want to see, and since obviously you need time to pass for that metric to be filled or satisfied, using a fresh wallet until you've satisfied is, there's no downside, only upside to doing that. So now I've connected on the bridge with my wallet here. It's on Ethereum, and I'm going to say I want to move into Arbitrum. And then here you can select tokens, and it'll see what you have in your wallet that is available for bridging. So you can bridge, I have a fraction of a penny of USDT, I have 20 cents, or I guess 0.2 ETH, and I have some USDC. I would recommend starting with Ethereum, because Ethereum is the token that you need to pay transaction fees on Arbitrum. So the simple way to do this would be just, take an amount of Ethereum, and it'll tell you if I do 0.1 from here, it's going to tell me what I will receive 0.099. So there's a little bit of a discrepancy between what I've sent and what I receive. And then all I'd have to do is say submit transaction. At this point, it's going to, tell me what the estimated gas fee is and everything I'm sending. I'll say confirm. And because this wallet is a hardware wallet, it's now bringing up a second, prompt for me to use my physical device. If I then sign this, it'll start a countdown down here and it'll be like 10 to 15 minutes. And then the transaction will be complete. Once those 10 to 15 minutes are over, the ETH will be in my wallet on the Arbitrum layer. So then all I need to do is, in my Fox drop down, switch to Arbitrum, and then you'll see, okay, here's my 0.09, whatever it just brought over. And because this chain uses ETH as gas, that's all I need. I'm ready to start trading. And so that's kind of like the step one here. If I'm going to get into trading and taking some like leverage positions, the next step would then be, personally, I like to use, a dollar pegged asset as my foundation for trading. It makes it easier for me to understand if I'm, in profit or not. It's a little harder if I'm up 10% on a position where I'm earning, I've put up a counterpart of Ethereum, but Ethereum is down 15%. It gets kind of messy and complicated. So you can absolutely do it that way, but I prefer to do it another way. And I've shared before in Discord, but there's a incredible swap router, odos.xyz is the web address for that one. And it's like an AI infused, I guess they say, trade router that looks at not just the path between, one asset to another asset on a single market, but rather it looks across every market and then finds a route. So if I click launch app up here it will say connect wallet. I've already connected, so it just automatically connected me. But now you can see, I can see what I have in my wallet. I have like, what is that? $3,055 in US dollar coin. I have some $2,400 in forex. So these are both stable coins. I have some decent amount of money to use in this wallet to do like trading positions, right? And so I'm going to want the asset that is needed by the application that I'm doing my trades on. So the three main perpetual markets that Sid and I that we use most and that I wanted to like touch on today are
on the Arbitrum chain.
I guess on Arbitrum it'll be two. The two major ones are GMX, which is
or there.
I guess there's three. Yeah, you're right. Here, these three. So we got GMX, we got Gains Network, and we got Cap. All three of these are, you can see up here, it's running on Arbitrum, Cap, also Arbitrum, and Polygon if you want. So if you prefer using Polygon, you can use Polygon on that one. And then GMX is Arbitrum and Avalanche. So if you have an Avalanche, it's going to be the same deal where you would just change your wallet to Avalanche blockchain, and you would need AVAX token as the gas token there. But similarly, you can bridge stuff over and do the same thing from the bridge here. Ultimately, I like the Arbitrum chain. It's just way, way deeper liquidity. So if I'm looking here on GMX, for example, you can see there is $458 million worth of liquidity in this pool available to counterpart the trading. So the main differences now are which dApp do I want to use? dApp standing for decentralized application. So GMX, if I go on GMX, I come up to trade. I can see the offers here are going to be between Ethereum, Bitcoin, Chainlink, and Uniswap, all against dollars. And the main thing to understand about GMX is that GMX is trading perpetual future contracts that settle in the asset that you're actually trading. So when I take a position in Bitcoin, for example, when I close that position, it will close in Bitcoin. And when you look at this perpetual market protocol, the GLP, which is the liquidity pool that acts as the counterpart to every trade here, that GLP is comprised of, here's the composition, and you can actually see, 25.8, that's thousand. So $102 million worth of Bitcoin in this pool, 120 million of Ethereum. You got like 2.5 million Chainlink, 2.5 million Uniswap, and then ass loads of stable coins, 180 million in USDC. You can see 49% of the entire pool is comprised of stable coins, and these 4 tokens are all stable coin assets. So the interesting thing about taking positions in GMX is they can settle in the asset that you're trading and the counterpart that you're taking. So when you're taking, for example, a long position, you can choose any of the assets that are part of that liquidity pool to act as your counterpart. Because what happens is if I take, for example, dollar token, if I take a position here with $100 coin, that position is basically indexed at the value of $100 or whatever the value is when I open this position, and that index adds it to this GLP. In the same way, if I'm using Ethereum, I could, for example, take a 0.25, so that's $43 position, and I could take a long position on any of the assets available. So I could use Ethereum to go long Ethereum. But the second that I make this position, when I sign this transaction, it takes the value of the Ethereum, which is currently $43, and that becomes the reference price to this long. It's no longer contingent on the value of the Ethereum, meaning that if, this is $43 right now, if the value of Ethereum went up like 100% and this was worth $86, my liquidity or my position that was opened while it was worth $43 is still counterparted at $43. So you can see.
So you're saying, for example, like say you use like USDC as collateral, right?
Yeah.
And then earlier on, like it kind of depegged for a little bit.
Yeah.
So that risk wouldn't be there then.
Exactly. Since when you take a position on GMX, you're indexing the value of your collateral asset at the time of opening the position. So no matter what happens to the value of the collateral after the position is open, you're opening it, and here you can see where it says collateral in, you're indexing it in US dollars. So not US dollar token or DAI or something, in US dollars. So that's true of your US dollar coin. That's true of your USDT. That's also true of your Bitcoin or your Ethereum. On the short side, though, and this is unique to GMX, you can choose which collateral you'd like to use, which asset you'd like to use as collateral. So you can see, I can click this drop down, and I can choose between the 4 different stable coins that comprise the liquidity pool here. So if I'm taking a short position, let's say short on Ethereum here, and I did $100, I'm using USDC here from my wallet. And then you can see here down below, short Ethereum is going to cost me 0.0017% per hour, basically in funding fee or in interest to borrow whatever amount of leverage. Here's the leverage slider. So if I did a 5x on my $100, I'd end up with, this is $500 minus the fees to open this position. So you're ending up with just under $500 worth of a position. And then you'd expect, as long as the position is open, to be paying this interest. This interest changes based on how much the asset that you're using as collateral is being utilized. So if I go back to the dashboard here, you can actually see, here's the composition of the entire liquidity pool. And then here, this utilization rate on the back side, you can see here, Tether, 50% in use. So of the 3,789,000 available in this pool, half of those are already spoken for in positions. Whereas at the same time, forex, 0.92%. And what that means for me as a trader is that I can come here, I'm using USDC from my wallet. I can make $100 USDC, 5x, and then instead of having it by default collateralized as USDC, I can tell it to use forex. I'm still supplying USDC from my wallet, but I've now told it to take the USDC, add it to the liquidity pool, the GLP, when I open this order, and then from the GLP, take the forex and borrow that. And the reason I would choose to do so is down here. Now the borrow fee is nothing. This is free leverage. Like, I can keep this position open for free. This isn't going to cost me any interest at all. So checking basically which of these assets has a better deal tends to be the way to go, especially because even if you personally have a a reason not to trust an asset like forex, which, by the way, forex is a stable coin that's algorithmically maintained by a decentralized protocol called forex.finance on Ethereum. So it's one of the first and probably the biggest algorithmic stablecoins out there. It is collateralized, I think like 96% or something, with actual USDC or Ethereum or other assets, but it has the ability to be algorithmically generated up to 10% of the circulating supply could be uncollateralized. And that's like, you can read much more about that, and we can dive into like the Forex protocol someday too. It's really cool. But if you were, say, like, I didn't want to get too deep into that one.
Yeah.
Can you hear me?
Yeah.
Yeah.
So you changed the frax as collateral and frax. Now, does that change your short amount, like 497? I didn't understand where that came from. The fees.
So the $100.
Where does that fees come from?
So there's a fee to open a position and to close a position. So when I first create the position, that fee is basically denominated here, and you should always expect that it's going to be the same when you close. So if I'm doing 100 with 5x leverage, and then lessing 2 times 88 cents, I'm left with 497.46.
I see.
So because it's on the front end, it's taking the open and close fee, so that the profit and loss percentage that it will display once the order is open, that will be accurate without you having to factor in the fee that you're going to pay for closing. That's
so borrow fee.
Yeah,
borrow fee is 0% for this.
Yeah.
When it's a value of something, where does it take it out of your balance?
Okay, so so the borrow
Available
fee
balance.
as the balance, or as you keep a position open. So let's here, I can open a position actually to show what it looks like. It makes a lot more sense.
Max, should we just like start with the chart and then
let's look at the chart and then see which direction I want to take a position.
Because this might be
the borrow fee.
Yeah.
The question I have is the borrow fee. It gets taken when you close a position. So basically, everything's calculated to make sure you have enough to pay your borrow fee, or is it taken out on every hour, just like
in real time?
Your balance?
Yeah, it's taken out in real time against your P&L level. So once the position's open, if your funding fees and stuff are counting against it. So even if the price doesn't change at all, if this fee were higher, like for USDT, it's going to be much higher. 0.005, because 50% of this is in use, right? So now if I open $100 position, this is going to start adding to my loss in real time. So and it is actually like on a per block basis on this one. So it isn't like some other marketplaces will have like a countdown to when the funding fee is paid every like hour on the hour. With GMX, you're paying the funding fees, or not necessarily the funding fees, but the borrow fees to the liquidity pool every single block. So you're paying that fee like 20 times a minute or something like that. But
if you guys
to this,
look at my screen, right? So this is another protocol that we'll go over, but CAP, you can see there's something called funding, and then this is the fee that I'm paying. It's the same thing.
Yeah, exactly.
I don't know.
So there is a little bit of a difference between this funding fee versus the one on GLP, because on GMX, on this market that we're looking at now here, this is cap.io, and you can see in the top right corner next to where it says long and short, how it says USDC and 50x. So Sid is using the US dollar, like USDC collateral marketplace. This market is 100% collateralized only in USDC. So when a position is closed, it will only ever settle in the collateral asset. Whereas on GMX, if I close a long on Bitcoin, I can take possession of the Bitcoin. On CAP, if I close a long on Bitcoin, I get paid out in USDC. Because there is only one asset as the collateral here, that means everybody who's taking long or short positions on this order book is taking those positions against the same collateral asset, which means that people who are trading long are paying the interest to the people who are trading short. And in this case, where Sid has a short sell open on Bitcoin, more short sells are open than long positions, and therefore he has a negative funding fee. He's having to pay the people who are maintaining long positions in order to keep this position open. Whereas I can see your funding fee is positive on Ethereum, meaning most people on this platform are currently short or are currently long Ethereum, and you holding a short, which is the opposite of what most people are doing, are collecting the funding fee. So in this model, funding fee gets paid by short sellers to long sellers, and by long sellers to short sellers. And depending on which side of the equation has, more leverage, that funding fee can actually be positive, and you can get paid to maintain a position open, which is
really, right. This is more traditional.
That will not happen on GMX, because on GMX you're not counterparted against one asset, you're counterparted against the entire GLP. So on both sides, the funding fee is negative almost always, or it's just zero.
Right.
But yeah, let's take a look at some of these markets. Let's do some live trades and do this in real time.
So I guess let's start with good old TA stuff. So when I want to take a position, what I do is let's just look at like Ethereum and Bitcoin.
Yeah. Those generally speaking, those will have the most liquidity, the least slippage, and the most available funds. And if you're trying to do leverage trades with serious money, I always stick to Bitcoin and Ethereum, because that's where the depth of liquidity exists to facilitate those trades.
Right. Yeah. So first, so let's look at Bitcoin, right? So you have your trading buddy on, you have your Starch, RSI. These are the main indicators. That's all that I pretty much use for trading. Mm-hmm. So first let's look at Bitcoin. So that'll be easier. So first I start with a weekly chart. I make sure right click, that it's not zoomed in. So right click, reset chart view. Everything is clear. So first I always want to start marking out my support and resistance levels. That's before I even start any sort of trade. So I mentioned this in the past. I always start at the weekly chart. So what I'm doing is just to go back to how to mark out your lines. I take the maximum number of touches. It's all about finding the peaks and the valleys. So, for example, I'm seeing this could be. So first, I look at where price is, where the current candle is, and then I want to mark out, maybe a few lines above, a few lines below. So
you chose that one because it's where the recent pump stopped, and also it looks like previously it bounced there on the double top kind of pattern, and it has. Mm-hmm. So do you look that far back, or are you looking mostly just at the last couple months? Or are you looking at the whole picture right now to see? I'm curious.
Well, I guess all you want is you look back till how do I say this? There's no point looking back before this, just because you take the section of the chart where where it informs your line based off your current candle. For example, if it was somewhere here, right? Say this was back in time, then you wouldn't have to go back, because there are no candles around here.
Yeah.
Give me that piece of information. If this was a current candle, then there's nothing it's just air above. Yeah. So you need to go back to a point where you can see a peak or a value. So
this first one you drew, I'm on board. That's where I would put my line too, just based on it looks like it bounced there when it was pulling back, and then it looks like it was rejected there.
And I take exactly. So you take you make sure you get the most number of touches, and that's how you kind of draw it. Yeah. So that's resistance above. Then let's look at support below. So I would just do this. because see here I see a wick here, right? Take that wick, and then I see a peak here, peak, wick, peak, and that's where I would like put support below.
All right.
So most number of touches. Yeah.
Gotcha.
And then let's do
What about the last 5 weeks worth of touches
like these
down?
guys?
No, over to the right, all the way to the right. So you got current. Let's go up six. Like the first, with the 3, 4, 5, 6. Yeah, it wicks down, but you don't really look at those as being significant.
No, because like, so first you want to take like the solid peak, right? That
Solid
like,
peak, okay.
yeah,
No wicks.
like that
Gotcha.
gives it more weightage, right? And then so you look at that first, and then to kind of refine it, you also then you want to take other sort of wicks to like support them. So think of
So
it as like
all the
the
way to the
floor and
left,
ceiling.
though. So all the way to the
that's
left, where it like blew past what your line is. That's that
here.
really, yeah, that spot. That
Yeah.
is what you're looking at as basically your first
Oh, sorry.
major part of that line, I guess. First indicator.
But first I start here, right? Like this is
Yeah.
important just because like these peaks are solid. But then when the chart is like framed, I also did see this too. So I was like, oh, this kind of lines up with the same solid ground.
Yeah.
So that's why it all lines up.
Yeah, so that's
And
a pretty.
that's why I tried.
So then that would be like your pretty decent conviction on that being a decent support range right now. Looking for a bounce there.
Exactly.
Okay.
And then I would probably get one below. So here, let's see.
And now you're looking kind of where your cursor is, right? Like more recently the candles. Okay.
So here, like you guys can see, like here, this is another like solid, and here we got like a valley. So we got that, and then we got like a lot of solid ground here, and then this sort of wick here too. And then so say you got like 2 supports below, you can keep drawing it till like the last one, right? For example, you know what? Let's just do one below the band too. So
yeah,
maybe so here, like I would also see this guy, or maybe this wick. Yeah. So this wick, this is all solid ground. This one and this one. So say we marked out a few supports, and
are you giving
about
more weight to the like section where it bounced versus where it like slowly dipped below now in that like if you're looking
like this week,
like before you see that like little U valley that happened like right before that, it looks like you got a couple weeks that are closing below where you've just marked support now. Does that
like these
a little bit further left?
There. These guys?
Yeah, those guys. Yeah.
So I actually gave more weight to this because it's solid, and then I just lined it up with this wick because like I just think.
Oh, with the wick.
See this?
Okay.
Yeah. So wick, all this is solid, and then it's solid here too.
Oh yeah, on the far end, that looks like right before it actually took off in like kind of more of an aggressive way. All right.
So you see, so all I'm trying to do is like I'm trying to get as many taps as possible.
Yeah.
Like it needs to line up, right?
And then you zoom in from the week to the
daily,
so right?
So then the next step, what I do is like I change it to the daily chart, and then I check the same lines. So now the daily chart, I just use it to like maybe refine. It's all good. Tap tap tap. That's good. It lines up. This one.
Before you move one, don't move it. Tell us why you're moving it.
Okay. I'm just trying to see if I need to move it. In the first place. I think maybe, yeah, maybe this guy can be moved down a little bit just because like there's more, there's a little bit of an air pocket here, which would, like if I move this line down, it would line up better just because like then it would touch these wicks.
Oh, I see the
Plus,
far ones. Yeah, on the
plus
left.
it would be actually on the valley of this. See, so if let me undo this. I know it's slight, but see, there's an air pocket here. It's kind of, this is not exactly lining up to the base. So I would just like move it down a tad, and then it would catch, say, these wicks. It would be at the bottom here, and then it would also catch like some of these wicks. It's just like refining the same line. And then this looks fine to me. So it's like you move it to a place where you can catch as many of those like hits,
Gotcha.
if that makes sense. So yeah, so say now I have, and let's look at resistance because this line here, yeah, that seems fine. So say now we got the same. We didn't really make any new lines. It's the same lines. We just like to find it on the daily chart.
Yeah.
And feel free to ask me any questions or like stop me. Okay, guys.
Yeah.
Like, if you have any questions. So now, at least for the style of trading that we do, like, major like swing trading, I usually just start with the weekly. You want to start with like higher time frames and then like sort of like use the lower time frames to refine, the information that, or at least what your bias is on the higher time frame charts. Basically, if the same sort of bias lines up on all time frames, then like the probability of your trade going the way you want it is higher. That's all there is to it. So it's like, so say like the weekly, say like weekly, right? Like, okay, the buddy, we don't have a bear print yet, but then we hit resistance and we clearly like turning south because like the stock is also in a downtrend. It didn't go past resistance. Sorry,
I got a question. So all these weeklies are not touching your second from the top. So these weeklies, current ones, like they're wicking to a point. Yeah, they're wicking to a point, but they're not coming down to the line that you feel is the point.
Exactly.
Like,
so therefore,
isn't that significant? I guess, or you're not looking at that.
Yeah. No, you're right, because like here's how I trade, right? Like what you're doing is you're basically marking out your levels and you're trading at level to level. So you're just looking at where the current candle is, whatever time frame it is, whether it's a weekly, daily, whatever. If it's hanging in between two levels, like two lines, you know that most likely like price is gonna try to like hit the bottom, because like it's in a downtrend and it's not hit support yet. So if it's an uptrend, and if price was around here, like say in the middle, then you would play the uptrend to the next resistance line. So so if price like kind of hangs in in the middle of two lines, you see what the trend is, and then you're playing it to the next level down or up.
Yeah. So the way I'm looking at this chart, I would be looking right now on the weekly. I think, obviously the weekly trend is bull, but the last few weeks are showing us trending to this support that you've drawn out now. So what I'm expecting to see is for us to at least wick down at some point and touch that support before turning it into support and bouncing up, or before failing
or we lose it
and we start to drop lower. But either way, from where we are right now versus where the support line is, I'm looking for opportunities to maybe capitalize on the volatility short in the short term at the moment still. And that's for short term swings, like 1 or 2 days, maybe 3 day positions. Not like right now, still on the weekly, I would still mostly, I would say, maybe place limit orders along the support level and enter for a longer play, for a longer term play, maybe look for a entry price there versus a short sell.
Yeah.
Because
maybe here, maybe
especially between
here,
those. Yeah, where the strength band is. If we bounce there, then I feel like we can move much higher still. But if we don't bounce there, we can absolutely get a new low, or at the very least retest the previous low around 15, 16,000.
Yeah. Here's another.
Yeah, way down there. Okay, it's 17,000.
Yeah. So somewhere around so. But yeah, so
still not a lot of room though.
So price, yeah, but so price is trending down. At least that's what I'm seeing. Mm-hmm. And then so I move it. I changed the daily chart.
Yeah.
And daily chart though, we had a bear print with a red band.
That one hooked me up. That's why I was short before all this crap happened. So that really worked out for me.
Yeah, before the SEC, it didn't really matter. You know what I mean? We had topped out, and so when I saw the buddy give us a bear signal, I started scaling into a short position. That's what I did.
Yeah.
Always scale in and scale out. That's the name of the game. So you start building a short position around here. And then, of course, see, because the Stoch RSI was oversold, we had a retest, and price can be bear, but it can always have retest. All it's trying to do is it's trying to retest this resistance around here.
Yeah, that's the strength band really works well for too, where it's if it's retesting and we close below the strength band, that's definitely boosting my conviction on the short then.
Yeah, so if it also gets rejected at resistance and the strength band, and then of course we got it turned red, which again it definitely showed that we're getting into a bearish trend. So you start you can start adding to your short position. When you start seeing this rejection, and also you're making for me it's also making lower highs and lower lows, which that's what a downtrend is. Price keeps getting rejected, resistance drops, again gets rejected. But also the band is kind of also holding as resistance, as we can see. So you start scaling in here and start building a short position. High leverage positions, you don't have much room, so you don't have the luxury of
building forever.
Your position. Yeah, scaling a lot. So these I do bigger positions with lower leverage, and then the stuff that you guys are seeing, my high leverage ones, those are shorter time frame charts, the hourly, or sometimes I use a 15-minute too.
So you're still looking at the same support and resistance levels that you drew out at 1 week and 1 day, and then you zoom in on the 15-minute or something just to see is now the moment to open this position or not? Or let's try that. Go to the more tight time frames. Let's see if we can take a position.
Yeah. So for swing trading, I know a lot of traders, they have different time frames. I've seen some really weird ones. I've seen them using some people use 7 hour, 8 hours. I'm why are you doing that? So for swing trading, I usually use weekly, daily, and then I go to 4 hour. And then so what I'm doing is changing the chart to 4 hour and seeing You know,
For,
you can use a 4-hour to make the lines like a little more precise. You know, maybe like instead of this, maybe like bring him down here a little bit.
so it hits like the
Yeah,
actual like body of the candle, not just the wick.
exactly.
Gotcha.
So 4-hour here, it seems okay. This guy
Yeah, that
seems
one looks
okay.
like it's pretty spot on for that second bounce too on the way up.
Yeah. So here, like here, you can refine it. Because see, I see a peak here, but then those will also line up with these wicks.
So you slide
So
it up a little
pull
bit, you
him
think?
up a little bit.
Yeah.
Yeah, just a little bit. Right? And then here, sometimes you just have to keep like zooming in and out, like especially like 4-hour. Let's see, this is kind of like
That one looks
okay.
like no, that one's actually not bad considering the first one. All right, now let's look close to the end of the spot. I'm curious now. So the 4-hour was bearish. It looks like the SRSI has plenty of room down. So far, I'm still open to taking a position short.
Yeah, exactly. So in between, like you can have like retests right along the way, but say like that's a long way down.
Yeah.
So it looks like we got bear like you said, and the SRSI is like it still got room to like go down.
So I like that it pushed above the strength band and it was rejected and is pushing below, the band staying red. So I would say that like wick, the top of that wick where it pushed above, above that wick is where I'm eyeing a stop loss for a short sell. Like a little bit above that.
Exactly. So if you're putting a stop, if you're setting stops, like what you do is like wherever the wick is, you give a little more like room.
Yeah.
Like so, basically, you mark out your like resistance line, which will be like around so. Because I'm taking this guy, taking all these guys, and then say these wicks, and then so like you would leave a little more room.
I got a question.
Yeah.
Can you go back to the daily? And so go back to the left where so we saw a bear right there, that red red dip on the left side a little bit more in the middle.
Yeah.
Not that bear, but all of
the little fake out there, yeah.
So that faked us out.
Yeah.
You would have got creamed if you would have stayed in your position because bull hit way above your bear mark, correct? How would you have played that, or did you even play that? Do you remember?
So that one,
this is a scenario that I'm like, this is a scenario for me, which I would get creamed, I think, because I don't know, how do you not get screwed over on this part?
So that's where like stop loss is coming.
Buddy is showing, like there's a lot of places Buddy is showing, and the trend just stays that direction. But I've always had the question for you guys, and I never really could write it out that nicely. But this to me seems like a good way for me to lose something.
Yeah, no, that's a good question because like sometimes you have fake outs, right? So this is where stop losses are very helpful. So say you shorted here, you would just set a stop to either like break even, or like even if you're taking a wick, you wouldn't really, it would just be like a wash trade, so you would, if you set a stop loss, you wouldn't really like be losing money.
Yeah, generally the way that I trade this one is this is the daily chart, right? The daily chart, the daily candle closed and the bear print stuck there. So that is now going to be like, okay, I'm going to open a short. So I'm opening a short kind of where the next candle starts. Obviously, I'm not going to be able to catch it on that same mark, right? So I would have opened a short at the top of that candle, and I did write it. It would have ridden it down from there to like the bottom of that peak. At that point, I would set my stop pretty much at either a wash or even a little bit in profit at this point, just to be like, oh, cool, I'm in profit. Great. If I get stopped out of profit, I'll open up short again if it does retest up. But yeah, like Sid's saying, the stop loss is always where I'm.
So you move your stop.
I agree.
Yeah,
I agree. I would do that. But now let's move over to the next bear. Like move all the way over to where you were showing us before.
Yeah.
Now that's bear there, and it goes down. Let's say you set your stop. The next candle. Let's say it goes. So now you set your stop there, right where he's got the right at that top point.
Oh, here.
But now it moves up.
Yeah.
But you're still bear. Now you're like, how are you thinking about it when it's moving up above the bear marker that day? So now it marked bear. It was down. I don't know. I can't tell what the numbers were, but it's moved up. Now you set a stop loss. You got stopped out. Are you chasing anything? Or what are you waiting for now?
Go on.
So the other thing I'd like to look for is like the print and the band sort of match up to give me like extra conviction. So that's why I don't take a full size position here. That's why I start scaling in. So even if I get stopped out here, like it's, anyway, my stops is like at break even, and it's a smaller size position, so I'm not really like losing anything.
Yeah, I actually did play.
Like
I actually did get stopped out. So I got stopped. I lost.
When did you open again?
I opened. Look, you see, Sid. I'll tell you where to put your cursor. It's the candle right after the bear, literally the bottom of that candle. Because I opened the next day at like the open, like right. That's where I shorted, and then I got stopped out at basically the top of the candle and ended up taking like a 1.8% or something like loss on this, and then I reopened the short. What is it, like when we were rejected at the green band, because I got stopped out, we moved up, we didn't close and flip the band, and then I started scaling back in a little bit below the price you're looking at now. If you go a little lower, kind of a little higher than that still, actually. Yeah, like around there. Once we got full days closing below that strength band and starting to move down again, I was like, okay, we're still bear. Like I kind of jumped in too early, got stopped out, I opened up again, and then I shorted, and then once the band flipped, I added more. Once we added to red, I added more short, and then actually I think I got stopped in profit recently there on that pump, so I haven't been holding that short for the last week or so. But I opened right when we got this print. I got stopped out at a loss, and then I reopened when I saw it retest the strength band and not flip the print back to bull, and then I got stopped out. Like I think I ended up getting stopped in profit for like 6% or something. So between both of those trades, I walked away with like 4.8 or something. Wasn't terrible. Some of them obviously, like I do get stopped at a loss. It's not always a win. I should add some of my flex my losses as well. But that's the nice part about the stop loss. It really mitigates that, because I'll be opening positions and then I'm like, okay, I'm not taking more than a 2% loss on my position. If we do that, then okay, I need to reassess when to reopen, versus let me ride this and hopefully it gets rejected here. So I got stopped out almost like basically right at the top of where that bear candle was. But again, I opened at the bottom because, when you see a candle, like the way that candle worked was we got the bear print. I opened the next day, the candle opened, and then the market started to climb. So like I got kind of hosed.
For me, I start scaling in, and then I use a lot of like TA. Like I just basically, then what I do is like I'm like, okay, I started scaling in based off the daily bear print. So then what I do is also like I start marking out like other resistance and support lines, like because sometimes what you mark out in the weekly, you can't really like see it on the daily. Like you need to mark out more lines. So I was like, okay, like price is running back up, but then I was like, okay, how high can it run back up for me to like, then flip my bias? And like I saw resistance here and also like here, basically, for this like body. So this was the room that I was giving it to determine whether this was a fake out or not. And then price just kept getting rejected here. And then when I saw the band turn red here and price failed to like close above resistance, I basically then added here. You know what I mean? Or or like, yeah, if I didn't get stopped out, sometimes it's a little more degen, but like sometimes I forget to set stops, and then, and then I'm still like holding a position.
Forget? How does that happen?
Yeah, exactly.
Never again.
And I know, never again. It's so I lost a lot of tuition money then, that way. But yeah, so I was like, okay, it's not closing above. It keeps getting like, it keeps tapping the line, and then it got rejected. Band flipped red, and then I was like, here the trend started. Like I'm like, okay, it's lower highs.
Mm-hmm.
So I went into a bigger position like around here, I think, and then I've just been like holding my position. Let's see, it's still going on.
291% isn't bad.
Yeah. So
Not
the
bad
thing
at
is,
all.
like, I plan to ride it till the next weekly support,
Yeah.
which is here, right? So this is a daily. I can delete this, but say here, what I'll do is, like, I've never done this before, but like I'll trim half my position because I am paying funding fees too. So
Yeah.
like that's the thing. Like if you have a small size position and you want to keep it open forever, then you're paying interest on that. Like with, that's something you gotta like account for too.
Yeah. Unless you're
But what I'm
using
gonna do is like,
forex on GMX right now, it's free.
yeah, exactly.
Stay long or short
So
forever. Oh no, short forever. Long is different.
so say like, so I plan to like scale out, like take my capital out and some profit when we hit this first like weekly support.
Mm-hmm.
And then I'm just gonna like leave the position open till I actually like see it like tap, once I see it bottom. Let's see if I can like hold it all the way to the bottom. I'm not done that
Yeah.
before.
So to do a scalp
Uh,
play right now, would you zoom in to
Yeah,
like
so say we started with the weekly, then we changed to a daily,
yeah.
then we looked at the 4 hour,
And
and
so
then
far,
four
all of
hour.
these, yeah, the 4 hour still looks like, it's the RSI is looking like it's on its way down. It's getting rejected at the band, which is what we want. The bear print is in. Like,
Right. So like I would
still,
mark a resistance line here,
yeah,
just because like, the more you zoom in, right? Like the gaps are like wider.
yeah,
So you need to be able to, so say like, so that's resistance. So I'm gonna look for, and then there's I think one more here. Here.
Now you're marking like levels for
There.
swing trades, right?
Just, yeah, this is just for like, you know, uh, tighter like lower time like
Yeah.
swing trading.
What I like to do is
Uh,
I'll change the color for these lines to like something else because I have like
yeah, so,
my main resistance lines, and I'll change like swing lines to like pink or something.
yeah, exactly. I do like yellow, and then these orange guys are like higher time frame, right?
Oh, I see.
And then I would mark like support here, right? Like, let's see, here.
Yeah, I'd say there. Yeah, that lines up with both of those recent like bounces.
Yeah, yeah, some of that. And so I'm looking for it to. I mean, we're still on bear, and like if you're not using much leverage, I would still, I could still like short here if I had room for it to like retest this resistance line.
Yeah.
Like if I had this much room to not get liquidated,
I can do an example
even
of
all
that.
the way up to this.
I can do an example where I'll open a piece, I'll set a limit order to add to it higher, and then I'll set a stop loss above both of those to close everything. In case,
Like
so then
about
if it keeps running, I average down my position, and if it keeps running beyond that to the point where I'm like, okay, I'm out of here, then it'll automatically cut, and I can set all of that up before I go to the bar or something. Like I don't need to
manage your
be all over my spot. But zoom in a little closer. Let's see, where should we open? I'll try making one of these positions on a couple of different
So
markets.
that's a 4 hour, and then
Yeah.
and then what if you're scalping? Like I'd also look at the 1 hour.
Yeah.
So I changed the chart to 1 hour, here, let's see. Oh, 1 hour is also bear.
Oh, that's perfect. And it's right.
Yeah, so we got a bear on the daily.
But you got a
4
bit of
hour.
a room in the RSI here still, so we could see that
Yeah.
next resistance level get hit. It would also not flip the bear print until it gets much higher than that still. So.
Right. I think it can like it might like it could also tap this one.
Yeah.
Like, you know, you could also like do something else.
That's kind of what I would be looking at
It's
here
also a
for a
possibility.
scalping swing. And then I would say if it goes much beyond that bump, I would want to cut. And that would be
Yeah, exactly.
like, what is that, 26,200 or something? Or
Yeah, 26043 or something. Yeah.
Yeah, and
You
then
know,
260 or 26.
So it's the same line.
Yeah.
So it's the same line that I drew out in the 4 hour that I'm just like refining on the 1 hour. No? See, there's you push it.
So it looks like you want to go. You still want to go long then, for the short term.
Yeah, just to play like, because this is a bullish like candle. This room start seems to be going up. So if you're like scalping, like you said exactly, you'll go long, and then like start like taking out profit here, or just keep moving your stops as you go above.
Yeah, or you could start like quarter bag short here and 75% added at the next level. That way, if we don't get the push, I like to do that sometimes. Which I guess I could share my screen and just do that right now and show you like how it would do this.
Sure.
So
it's the same thing. So you start with the weekly, right, and then do daily, and then 4 hour, 1 hour, and then if you're like glued to your computer and you want to like scalp, like the lowest like I'd like to do is like 15-minute. So these are the time frames I use, like monthly, weekly, daily, 4 hour, 1 hour, 15 minutes. I think those are good. See, like on the 15 minutes, it seems a little like over bought, but then that's a bullish like candle. And see, you can see the resistance line like.
Oh yeah, it's kind of touching right up to that. Here. See, and it's like just breaking out slightly above that strength band, but also like hasn't flipped the trend, is approaching oversold. Like this is kind of a decent moment, I think, where I would like to start scaling into the short. Even though we do have that room up to the next level. So let me do that. I'm gonna do it. Let's see. Should I do it from? This is GMX. This is on our Arbitrum. I can also do it. I like DYDX is even cheaper because I don't have to pay gas fees.
Or you'd also, but DYDX is like on Ethereum and you need a VPN for that.
You do need a VPN
if you're in the US.
That's true. Okay, so I'll stick to GMX. This is anyone can access this. No VPN, no nothing. Although I do kind of recommend people use VPNs. Because it gives you access to a lot more geo-fenced kind of applications that are out there. But so here we go. I'm looking now. I've changed this to the 15 minutes. Oh, go on.
Or you could use cap too.
Yeah, that's true.
Because cap has no minimum.
That's true. I'm going to stick to GMX for this example, and then I'll do another one on cap, and then I can do another one on somewhere else. So I'm going to do, let's say I want to do $100 for this, and I'm going to start with like, I want a 5x position short. I am going to change this to forex because that's where I get, super cheap borrow fees. And the first thing I'm going to do is I'm not going to go all of my position right here. Instead, I'm going to do, like I said,
check this out. Like, I don't know if you guys saw, like we saw a bull print appear and then it disappeared right when it was like crossing the line. So that's why it's also important for the candle to close.
Yeah, let that close. Okay, I'm going to jump back into build this position now. So here we go. I'm going to switch this to Bitcoin because we're looking at the Bitcoin market. Here we go. It's at 25,933. At 25 or 26,450 or something, I would definitely be like cut everything and run. But before that, I want to come here and I want to, I want to do $100 that I'm going to commit to this position. I'm starting with 25 right now, and I'm going to set a limit for the other 75. So first thing I'm going to take, I'm going to open the position here where we currently are. So I'm set to short. I've already chosen to use forex, so I get this lower amount. I don't have to use forex. I'm still going to use my USDC. I'm taking $25. I'm using 5x leverage. And since I'm going to get up to 5x by the end of building this position, I'm going to start with 4. Here, I'm going to turn off the slider. Oh, no, I can't.
Yeah, just do like $10 at 5x or something, or
yeah.
$5.
Let's do. Here we go.
Because there's no like minimum size.
I guess that's true. Yeah, you can do this as like cheaply as you want. I'll do what I was gonna do though. I was gonna do $100 and I'm gonna split it into a couple orders. So first thing I want to do is scoop the 25, and I want that around right here. So I'm gonna say I could do limit, but I'm just gonna do a market. Yeah, no, let's do a market. You know what? Fuck it. I'm gonna do a limit, but I'm gonna say 25,930 as my limit order. So we'll say Bitcoin. I will pay 25,931 is, it's at 35 right now, so I'll say 35. Price below, still too cheap. Let's say 38. There we go. So it's at 37.40. Let's do 37.50. There we go. So I'll say create order. I'm doing forex leverage. Here's the market price. Okay, create. It's going to prompt me with my MetaMask wallet up here, which I guess it is not popping up on the screen share, but it did say, would you like to confirm? I say, yeah. There you go. Now you can actually see my my Trezor hardware wallet. It's telling. So now on my physical device in my hand, I'm prompted and I'm signing. I've done that, and now it's finished. So now here we go. I have an open order. Oh, okay, there it is. This is an existing order from a previous stop loss. So that's red because it's not viable anymore. But here you see I'm increasing my Ethereum position by 99.60, which is my $100 less the cost here of the opening the positions. And so that is set. We're looking at a price of 25,937, and you can see that the spot price says it's above that, but my order hasn't filled yet, and that's because there is a spread on this that isn't super clear, which is why I will usually use limit orders.
Order book, or we're not seeing that.
If I had used a market order, it would have filled immediately. Here goes. You can see it just actually filled. But it would have. So if I go to trades now, you can see here it filled at 25,937.50, exactly what I wanted. So now if I come here to my positions, I guess I have to. No, I didn't have to refresh. It just took a second. So now you can see here's the position. The net value is, again, I started with 25. Net value is 24.80. That's because we've already lost the money from the open fee. If I mouse over here, it'll now pop up and show me, I'm paying after like profit and loss. If I close now, I'd lose 19 cents. 9 cents of that is open, 9 cents is close. So it's mostly open and close plus like a slight difference in spot price. And then if you mouse over the collateral here, it'll show you what your borrow fee is going to cost. So let's see, when I refreshed, it reset me to USDC. And so instead of paying nothing,
FRX.
So I didn't pay close enough attention there. So instead of paying nothing, I am actually paying 3 cents per day to maintain this leverage. So the leverage here is $75 because I've put up $25 of my money and then I've borrowed $75 from the liquidity pool. And for that borrow, I need to now pay 3 cents per day. I can leave this alone, but like I said, I want to take the remaining $75 and I'd like to purchase, another short. So I'm going to say, I'm going to do a limit order.
So you're basically scaling into this short position.
Yeah. So here I'm at 26,150. So now I'm going to say limit. 26,150. I'm going to short with the remaining $75. So then I can say create this. And I'll want to use here. Hold on. If I say close, you can see that I'm collateralized in USDC. I want to use the same collateral so that I'm averaging the existing position. If I used a different collateral, for example, forex, you'll see it's creating a brand new position. 4x leverage. This is the entry price I'm specifying. This is the liquidation price for this position. If I add to my existing collateral position, which is USDC, you can see instead of it doing that, it is actually going to adjust, my existing collateral and leverage to update it based on this new order. And like I said, I want it to be 5x short. So now I can come up to 5x, and because I already have this one at 4x short, I can actually go for this next one a little bit over 5x. So we'll go like, what is that, 5 point something? 5 and a little bit. And that'll push me to 4.9x. And then again, it changes my entry price from 25,944 to 26,108 if this fills at 26,150. So now I can say,
so it's just like averaging everything. That's what.
Yeah, and it becomes an average position rather than I'm opening a new position. So now I can say create limit order, create, and again, MetaMask just popped up here and it's saying, hey, it's going to cost 20 cents in gas in Ethereum to pay for this. Then I'm going to say, yeah, that's fine. And I don't know why it didn't pop up this time, but my Trezor screen popped up. I signed, and then it's done. Now here you go, create order. We'll see the order added here. There's that order. And then if I hit this checkbox, it'll chart the positions onto the graph too. So now you can see here. And now the last thing I want to do is I want to stop. So I don't want this to ride forever. Obviously I will be liquidated at 31,100. I want to close this position way before that. So at here we go at like 26, let's say 430. Like that's above this last wick. I'm going to also double over and check on the Trading Buddy so I can get like on TradingView so I can get a clear version of this chart. I'm going to Bitcoin here. I'm also on the 15-minute because that's what we're trading. You can see it is very oversold now. So, sorry, overbought. I was right the first time. It's very overbought now. So hopefully we dump here and I catch my short. I'm already committed a little bit, but hey, if we don't, I'm going to catch an average if we push all the way up to here, which is kind of what I wanted to happen. And like I was checking here, 26,440, 450 looks like a very safe, well above my area here. So what I can do now is come back here and I'm going to create a stop loss for this position by just clicking close and then changing trigger. And then I'm going to say, max is right now $900. When this position,
the full amount?
That's the full open amount currently. But when this is full, then you can see I'll be adding, so I have to actually do a little bit of math here now. So I want to know how much is this position going to be worth. It's about, let's say 5x 100, so almost $500. I'm going to say like 450 just in case, because if I set the limit too high, the order won't fill. Like this one, it'll turn red because there's no open position that can satisfy its condition. I can't go over and set this to reduce only. You can do that on cap. So since we're on GMX, I'm not going to confuse things here by saying all this extra shit, which I already have. So what I'm going to do is I know that, if we close this order, I'm adding another $75 at around 5x leverage total. I know I'm going to be close to $500. So I'm going to say, if we push beyond 26,450, I want to close 450 of these dollars entirely and just do a stop loss there. And then, hey, if we have $50 left running, I'll suffer that loss. That's okay. But that's kind of my best bet for making these positions here. So what I'm going to do is say again, close, trigger. I want to close $450 at a price of 26,450. Oh, it won't let me do one before. That's annoying. So I can only close open positions. So I guess I'll have to set these orders separately. So I'll have to keep an eye on if once this fills, then I will have to come in and set the stop loss. But I will set a stop loss on this first portion of the position. So again, close, trigger, full size of this position, 26,450. And then here, if this triggers, I will have suffered a 7.8% loss on on this swing, and that's only on 25% of my full position. because I'm scaling in. So I'm going to say create this order. Same deal. I'm getting a pop-up here from MetaMask. It's telling me it's going to cost, 22 cents. I'm going to say yes. And then here's this. It's like, hey, do you want to sign this? So I click the green button. Yes, I do. I verify that this is actually the transaction I think I'm signing, so I'm not being phished or screwed by some kind of thing. And then here we go. Now that this is created, you'll see it added to this. There it is. And then here it is, decreased short. So it's adding it to my chart as well. So right now I've opened a short sell with a little under 5x, 4x leverage here. So $100 I've short sold Bitcoin using only $25. I've placed a limit order for another 100. So that's right here. And you can see if I mouse over, the collateral value is 75. And what that also means is that this $75 is no longer in my wallet. It is now in this contract transaction. So if I want the $75 back, I'd have to cancel this order. Now you can also see here, if I check in my wallet, I still have 29.56 USDC in the wallet. I still have all my other assets. None of this is exposed to this position. This position has a maximum loss. I could get liquidated up to the full value of my position. That's it. There is no way for me to be on the hook for more than 100% or more than like total loss, which it sounds like obvious, but that's not necessarily the case with leverage trading. Sometimes you can be on the hook for more than what you've brought to the table.
Especially with like stocks and stuff. Yeah.
Yeah. So this position is open and running, and now I can sit back and wait. And like I said, this is going to cost me a little bit, so 3 cents per day. Not terrible, but it could have been free had I simply changed to forex. The other thing that you can do on this platform is you can go long and short at the same time, because the same asset at the same time. So because I took a Bitcoin short position and collateralized it in USDC, that position is open. But now I can also take a Bitcoin long position, which then automatically by default, you see I can't change the collateral because it collateralizes against the entire liquidity pool. But the takeaway here is you can open long and short positions and then close them in whatever order is most profitable for you. There is no first in, first out order processing with these applications. So you can open like this short that I'm adding to. I could add to the short here and then close a portion of it, before, like if we drop back down, and it's not like, oh, I have to close the one I opened first. None of that nonsense. It's up to me when I want to take profit, how I want to structure my profit taking, and all of that stuff. And so you can see again, this is going to move in real time. I'm down only 15 cents now, so it's actually kind of coming back here as the market's pulling down a little bit. This is partly why I didn't want to just ape everything at this price, because you don't know for sure if this is going to, is it going to make it to the next resistance, or was that it? Is the fun over right here, and are we now going to sell off and move down again? So it does look like, starting to pull back, and then you can, very quickly get into profit with positions like this. Once this position is in profit too, I can again come here and say close, trigger, set my entire amount, and then set the stop loss in profit. And so then I can, mitigate the potential of me losing anything beyond what I've already committed. This is kind of like a quick overview of how I'm going to take a position in GMX. You can do this type of thing without leverage entirely. If you don't like to pay interest on borrowed money, or if you don't like to overextend the value that you have in your wallet, you can just toggle to swap. And then you can just limit trade directly here. So if I'm taking I can do Bitcoin, I can't limit trade short. If I want to trade short, I do have to borrow the Bitcoin from somewhere. I can't sell Bitcoin I don't have. But if I'm trading long, I can just go to the swap tab. I can do $25, and then I can literally just enter a spot price and be like, okay, at 26, or let's say I'm buying, so at 25,500.
So it's like
buy this.
It's like Uniswap or whatever.
This is like any exchange. So I could trade this. That would create limit orders, and those orders would fill. and there's no
nice.
liquidation, there is no margin to maintain. So if you're just on the swap tab, you can use this just like a spot market, and that's also really powerful to be able to set limit orders and then set stop loss and all these types of like orders directly from your wallet without having to make a broker account or send a picture of yourself
Yeah, no
holding your
KYC.
holding your driver's license and rant today's newspaper, like like none of that stuff.
McLevin picture.
Yeah. So it was really nice because it does let you do this kind of stuff, and like it lets you do this from your wallet, and your wallet is so liquid. Like, for example, I'm noticing here when I'm looking at, I have thousands of dollars in stable coins that's just chilling. That's not a great, I'm not trying to do any $5,000 like leverage positions right now. Maybe after tomorrow's FOMC meeting, I might do that. And so the really cool thing about having this asset in my wallet and being able to access these trading tools from my wallet directly is that I have access to the rest of the DeFi scene as well. So, for example, like I want to make money on my stable coins, but I don't want to take a position right now outside of cash. And so I can actually do that too, like without, going to some other platform or moving my money around. I don't know if I should do that right now live just because it's a little off topic, but here I'll just show you anyway, just because I love this kind of stuff.
And then maybe we can show them cap and gains too.
Yeah, I'll show the other ones, but let me just do something with. There's too much capital in this wallet, right? So I got 2,400 here, 2,900 here. I want to make some interest on this cash. I'm gonna go to an exchange that I've been participating in. Here's RBDex. They have farms. This is a Uniswap clone, effectively, with like some adjustments made. So these contracts are all audited. The team behind them is also doxed. It's not like some fly-by-night operation. But you can see here they are offering a forex USDC. So both those assets I already have in my wallet liquidity pool. And in a second, it'll tell me what the APR is for participating here. So if this is worthwhile, like anything over 10%, I'm pretty interested. Because it's it's APR. I can do it for one day. I can come back tomorrow and dump it all. It's taking its sweet time though to tell me what the APR is here.
Probably.
I'm gonna do a refresh. You can see this one's absurdly high. But let's see. I'd like to see this load. I don't know. It could be my. Hold on. Let me kill my 1 second. Cancel that. And refresh. Okay, I just killed my VPN. I think that might have been what was chugging along here.
Yeah. Just don't open DYDX.
Still kind of chuggy. I can open it. I just can't make any trades. It usually it'll warn me. I'm just too stupid to see the warning. Like, here's a short sell on DYDX. If I refresh this, look, it'll tell you right here.
So DYDX is on the Ethereum chain, so there's no bridging or anything involved, but you need a VPN if you're in the US.
See, it says perpetuals are not available to people in my country.
And if you do, like, if you have a position there, then it'll kind of just, does it ban you? Or
yeah, it'll ban the wallet that you're using. The first time you fuck up, it'll actually give you it's like, hey, you're not allowed to do this from where you're at. Confirm where you are. So then you have to say where you are and submit. And then the second time you fuck up, it's like, hey, we gave you a chance and you fucked up, so your wallet is banned permanently. So yeah, be careful. And when your wallet does get banned, open positions that you have, like right now here, you can see I have a short sell on Solana open. It's 5% in profit. And you can actually see this is where it was open. I have a stop loss set right here. So, I am going to be moving this stop loss if we make it another leg down. But you can see I've just similarly to what we were talking about earlier, I placed the limit, like I placed the short, I shorted this market. And then once we pulled down, I created a stop loss in profit so that now I, hopefully can't lose. But if my account got banned, my stop loss orders would be canceled, but this position would remain open and it would be up to me to close it with a market order. So you can still
that would be the only option.
That'd be the only thing you can do with the remaining positions. Close and then you can withdraw. But let's see. Okay, here we go. Okay, 10.9%. It's not something to write home about, but 10% on cash in like cash without like counterpart risk isn't terrible. And if I have like $5,000, that's gonna do $1.50 per day. Like I'm okay with that. So I'm gonna participate in this really quick. So let me just do that. So the way to do that is I'm gonna go to liquidity, add quantum liquidity because that's a quantum pool. Here's that pool, forex USDC. And this is a V3 style liquidity pool, which is like a Uniswap pool that lets you set a range of price, which right now this is just like chugging too much for me. Nah, this is going too slow. I'm going to give it one more chance here. Oh, wait, that's Frax. FXS. Oh, Frax in US dollars. Let's see. Not too slow. Okay, I'll do that later. But normally what I would do is add liquidity here. Once it's added, come back to the farm tab, and then stake that liquidity here, stake LP.
You just like earn more.
And then, sign the transactions. It would add it to the pool, and then I could come here and claim, in real time, the yield that it's producing. Some of these pools are absurd, like 159% in real time is crazy. You do $5,000 into a pool like that, and you're pulling $35 every day. You don't even compound it. That's like $1,000 a month. But of course, then you're exposed to this ARX token, which is not necessarily stable, whereas these tokens are both very stable. All right. Instead of doing any of that shit right now, let's just show off cap. Here's cap.
So Max, like we got a bull print actually on the 15-minute, and then the band is like green. So say like we had marked out these like levels before, right? So it might like push up to the next one as we predicted. I think that like if it closes with a bullish candle where it's like higher than the other one, basically it's done an SR flip on this support here. See, that's what's happening.
Yeah, hold on, let me look at your screen real quick. So, yeah. If it bounces there, then I'll know to I have my limit set. So I have my limit set at 26,150.
Right. So typically how I would trade is like I don't really like especially like when I'm swing trading or scalping, I don't really like do limit orders. I just do like market. What I do is like I always just like wait for confirmation and then see what the trend is, and then just like play the trend. So like,
would you go long on this? I can go long and short at the same time, like we were talking about a minute ago. So I could try to long this.
Or you could just like also just long on cap and then just like keep that as is. So sometimes I do that too. Like if I want to take like opposite positions, I just use like multiple dexes or some like cap has certain coins. It has more coins than GMX. So like, so if you can find something on GMX and you use cap. Yeah. And then Gains has like even more coins, I think. Yeah. And higher leverage. So it's just like maybe you could take a long on cap.
If you want to jump to my screen and I'll show you the cap interface. Yeah. So here we go. I'm on cap.io this time. It's the decentralized perpetual market. Say start trading in the top right, you sign in with your wallet again. I've already done that. And then by default, I'm on the trade page here. I'm going to go to crypto and I want to trade Bitcoin. So BTC US dollar is the market here. And then here's what we're looking at. We're at the 4-hour chart right now.
You can change it
to the 15 like what we were looking at over here. All right. And so now what I want to do is I want to take a long position here. So up here, short, long. I'm going to do a long position. Instead of 50x, that's too much for me. I'm going to stick to 5 like we've been in these examples. So I'll say 5. Let's do 10 for this one. So 10. And then for this one, I'm going to say I'm going to do what kind of cap thrives at, and that is all these options. If I click options here, so by default, it's doing a market order. So I'm going to leave it at market. I'm going to do a market long. But I want to build in a take profit right around.
right?
Yeah, and I'm gonna do a take profit. Let's see, at 10%, it would need to be 26,217. I have mine at 26,150, so that would be a 7% profit. Not bad. Let's try for that.
Are you just like seeing where the resistance line is above and then taking profit just a just a little bit below that? You could do that too.
That's true. Let me toggle
So
back. Let me look at your resistance line was drawn
so
at 2670, right?
around here.
Yeah. Okay. So then let me do that. 2670. So I'll do 75. So we'll take
Yeah.
profit there, and then I don't want to lose more.
Yeah.
Let's say if we start selling off below like 25,900.
Yeah. So like you
here.
can also set a stop loss and take profit and everything all in one order,
Yeah.
which is cool.
So right, and then now I'm gonna do this. It's 10x leverage. If I do $100, that's $10 of actual collateral. So I'll do 250 like we did 25 on the other one as well. And then here you can see I'm gonna be paying 17 cents to open this position. My liquidation price will be $23,463. If we fall that low, I'll be liquidated entirely. But I'm setting a stop loss at 25,900, so I'll only stand to lose around 2% of my entire position here. And then finally, let's see. Oh, it's pulling down a bit here. Let's see, 25.9. That should still work out for me. So and then I'm taking profit at 26,075. All of this is being set on the front end. Now I'm just going to say create, buy. Or what were you saying?
Yeah.
I could say reject.
I was just saying maybe you can set the take profit a little bit below the line as above.
Okay.
So you don't get
26.55 maybe, or?
Yeah. Or 26065. So it's like $5 below the.
Okay, yeah. So that sees me taking a 4.7% profit, which is pretty solid for a quick scalp. And again, I could do this with $29,000 right now, which would be a counterpart of, or here if I just do $25,000, that would cost me $2,500 in counterpart. The fee to open it becomes $17.50. But again, I would take the prices here, the take profit and stop loss prices are not changing. It's still 26,065 and it's still 4.7%. So I mean, I'm not that hot on it right now, so I'm going to do 250. I would take bigger positions like that on a day like tomorrow, where if we get our FOMC news, the market starts reacting, and we get a clear direction in the short term, then it might be like, okay, sure, $25,000 swing, give me a margin of 2% loss, but 10% profit. And that's something I'm interested in. Let's see. I got to sign back into my hardware wallet here. So now the way that this works is I say, create the order. I'm saying confirm. I'm signing the transaction from my hardware device. And then again, this one costs 16 cents to broadcast with all of these terms. And so now that it's been broadcasted here, you'll see it in the orders. I think this one I do have to refresh. There it is. Sometimes. So here it is in orders. Oh, it popped up and disappeared. Of course, whenever you're trying to show something, it fucks up, doesn't it? So here it is. 3 orders. You can see I've created my long. So I'm creating a market long. That's why this is. So it's just taking a second to settle. And then you can see it's going to print a close long for the stop loss and a close long for the take profit all at the same time. And so again, if I refresh, I'm pretty sure this order will be open. Oh, it's taking a second.
Sometimes hit history and back. It just.
Oh yeah. Weird. It's being a little.
Yeah, it's kind of weird.
It's being a little slow right now, but it will open this order. That's also why I don't necessarily like doing market trades. I'll set limit trades so that if there is a slow or some kind of congestion on the chain, I'm not stuck waiting for confirmations while the price is still moving, But let's see, this will open here in a second, and then let me toggle back over to GMX. GMX also, so far I've paid nothing to borrow this. 3 cents is totally like livable. And again, like you're asking earlier, this gets taken out of my total net value. So in real time, I'm not like having to pay extra to maintain these positions. Let's see. Damn, this is the longest. It's usually not ever taken this long. The nice
maybe
thing
just
is
use
I can always cancel
another
it too.
RPC or something.
That's true. I could do that. Although the transaction is confirmed, so it's not an RPC issue. See, submit order. We can click here. We can say view in Block Explorer, and then you can see here the order's filled. It costs 31 cents in gas to do all those transactions. But there we go.
Or just like close out cap and then it's like real. Sometimes that.
Yeah,
I find that. Like, just close the window.
Let's check on that. All right, let's see. Let's check back on that in a second. That's cap.io. Strange. It'll normally open, especially for Bitcoin. Bitcoin has so much like available liquidity. You can see $2.1 million available. So that's weird that it's not letting me close or open a new position right now. This makes me uncomfortable. So what I would do is just cancel all these orders. So I can just click here, the cancel button, submit a transaction. And this way I don't have to wait and be like, okay, what happened there? And hope for the best scenario here. I can just cancel it and dip.
Okay.
So canceled, dropped, and then you can see back my amounts back in my wallet here, 29,330. Let's see. Yeah. That's annoying, but yeah, I mean, that is how it works, so I'm not sure why it wasn't working like that for me. It's clearly working on your screen there.
Yeah, on mine it's working. And also, like,
That's weird. That's never happened to me before.
It's never happened to me. I think it's just, like, slow. You earn, like, our reward tokens, right?
Oh, yeah, like that at the very top there, you can claim your rewards. That's just for any volume that you put up. So any trade, like the trade that I was just making, I would have immediately earned some ARB token to like claim and cover my costs. Same goes with, so here I'll do the long instead on gains, since I don't know why cap is being weird, but you can, again, it's DeFi. You go where things are working, where the liquidity lives, where the best deals are. So the next place I would go here is gains, and this is where we were trading stocks here before. You can see I'm on the it looks like I got closed out. $25 profit on that one, 6.5%. But I guess they're done doing stocks, which is kind of sad. But I can click on the crypto market. I can go to Bitcoin here, and we'll do a long here instead. So
here they're like minimum sizes.
Yeah.
Oh.
So when they're doing stocks, how are they like clearing this? I mean,
okay, so
how are they buying this stock?
There is no point in which you actually own a stock. What you're trading is a futures contract that settles in this case, DAI. So the counterpart that basically what you're buying, even when we're using, not when we're using GMX, but when we're using CAP, this is the same deal. What's happening here is you see all these assets that you can trade. Like there's crypto, there's forex, there's even QQQ and SPY indexes. So when you take a position in, say, the QQQ, or a stock on Gains Network, what you're doing is you're taking a position in this case, I'm using US dollar, but I could switch to Ethereum. And on Gains Network, I'm using DAI. You're taking a position in that collateral asset that's indexed against the value feed from the stock or from the index or from the forex. There is no actual settlement that happens in stocks. There's no exchange of stocks. It's just derivative assets that settle in whatever the collateral currency is. So when we were trading stocks, you never actually held stocks. What you held was a position that references the stock price, but the position is in DAI or in USDC or in whatever. And that's the big major difference between GMX and the other perpetual markets, is that GMX, you're only trading assets that the protocol can settle physically. So, Bitcoin, Ethereum, Link, and Uniswap, the protocol owns those counterparts as Bitcoin, Link, Uniswap, and Ethereum. Whereas Gains Network or CAP, the counterpart is here like a liquidity pool with USDC in it. Or here on Gains, the counterpart here is the vault. So you got $38 million worth of DAI. But that's it. The pool doesn't own any Bitcoin or Ethereum or anything like that. It just will take your USD or your DAI. It'll counterpart whatever position you're taking from the liquidity pool, and then you pay fees and stuff to maintain that position. And therefore, if, say, everybody goes short and nobody goes long, the funding fee for a short position would be absurdly high, like 0.1% per hour or something.
So go to Gains and I don't know if this is still the case. Try to short BNB.
All right, let's see.
It says maximum interest reached.
We'll say short.
So say, yeah,
spread,
yeah. So now it's a spread too high.
Order ready. So I can do. Looks like I could do an order.
By the way, my phone.
So yesterday,
my phone's gonna die any second. So if I don't say bye, that's just what happens.
Yeah. Is there?
Okay.
Before we get to I guess we kind of covered what I wanted to, which was how to make an order and what I'm looking at the chart to understand. But is there anything that you're would like to see done here in real time? Something that's I kind of wish I could have showed how to add to the liquidity pool, but it was going too slow.
No, I mean, right now I'm gonna have to tinker with it.
Yeah.
More often, I haven't done anything yet enough to really ask you guys some, mechanics questions on how it works and all that stuff.
Yeah.
Me, I just got to look it over and just keep on studying it.
But yeah. So did the questions you have about the TA, did that were that answered? How?
Yeah, I mean, you've been telling me stuff now for a good year and a half, 2 years or so. So I understood. I understand already kind of what you're telling me.
Okay, good.
The buddy. There's a couple things that I think. The factor, that 3, 2.5 settings and things like that. I think it's best, it's more of an improvement of the tool itself, but almost have that set as a default. So you guys keep on saying higher time frame set it to 3, lower time frame set it to 2.5. I'm thinking if I hit a smaller time frame, that buddy just automatically sets it to these defaults you guys recommend until I really become power user of it or something, and I feel like I want to change those settings. But for us that don't use Buddy now for however long you guys have been using it, it's kind of all the stuff to manage. I think is just more difficult. Let's say.
That's good feedback. Actually, I like that. Making it even more kind of you don't need to know anything about it. Just add it to your thing and it'll do everything. You don't need to have.
Yeah, I mean, a lot of times I know it's your guys' proprietary indicator. So all the sauce that's in that crunching numbers, obviously you're not going to want to tell people that detail. But for example, when you use some of the public indicators like a Bollinger Band and things like that.
Yeah.
You kind of know the center line, the top and bottom, how that's comprised. So maybe people that are using this might not feel comfortable maybe or really understand what is the strength band, what is it comprised of that's not going to give away your secret. I don't know. I mean, I don't know anything about what it is, but people feel confident when they're using some of these public or well-known indicators when they trade, right? They feel confident with it.
Yeah. That's true.
I don't know. I mean,
all right, I got you.
You just have to get used to it and just say, I trust it, right? And I guess you guys trust it because you guys been making trades on this, and maybe even telling us beforehand, this is a good trade right now.
Yeah.
Based
Yeah.
on that.
I've been trying to do that a lot more in the Discord to be like, hey, I'm taking a position now, doing
Same
this
here.
now. But yeah, that
With,
I think
yeah,
will
share a
help.
screenshot of the chart and then go
Yeah.
along.
Yeah, here you can.
But yeah, like.
Oh, go on.
Oh no, I was saying like basically like but the thing what I do is like basically mark out your levels and then see where the price is in between and then just like play level to level. Like
Yeah.
if it's a bull trend and then we and so there's still room to hit the next ceiling long, and then when you hit the next ceiling then like set a stop loss or like take profit or whatever it is, and then it's the reverse when going down, and that's basically that's all there is to it. That's how I do it. So it's not simple way, but
Yeah, I like the idea though
trading.
of like just being a little bit more step by step. Hey, I'm opening this position based on this information, and just like before I open it, open it, post after open, and just kind of like I think I can do something like that, so it keeps a little bit more like
So
transparency,
like
which will hopefully help people build the same confidence that I have. Because you're right, it took like quite a while to build the confidence to be like, I'm just going to trust the signal and go for it. And generally speaking, I've made more missteps lately when I've been like trying to like front run the signals and just like, oh, I feel like this is happening, and it's like, oh, I'm falling into those traps. But yeah, I think you're right. Like building the confidence is kind of like key. And I think you're right that like when people use public indicators, the confidence is kind of a given, whereas private indicators, that is a lot less, like a lot less just, handed over like that.
but
That's good.
but if you look at my screen, like if you go back to the Bitcoin 15-minute, and then we had drawn out the lines, and then I guess that it's probably going to do this, and that's what it's doing. See, we got a bull print, it did an SR flip, and then it's trying to target the next line up,
Yeah.
and that kind of like, that's all there. So I would have gone long right there, right? Like I was telling you guys
Oh yeah.
to go long, and that's all. I mean, it looks like
I
it's
like
working out the same way.
I do like scaling in like short, and I went short because of the wider time frame. Like I'm trying to maintain this short for the next couple like days, and I'll post in Discord how the short sell goes that we did here live. So I mean, right now I'm down 1.4%, 36 cents on my $25, which is still not terrible, but we're 36 cents isn't what I'm focused on. I'm focused on the percentage, because the percentage is what matters. And 1.5 or so percent livable, and I'm going to be averaging down at that next resistance line. So I'll let you know how that plays out here when it plays out as the markets move. But like I think today we're probably going to keep ranging a little bit flat, probably between this range that you've drawn out there.
Yeah, I shared
until
this on
tomorrow.
Discord, but like I want to take like in between this range, I'll keep scalping the edges, but like the bigger position I've left open, but like I'll add to a bigger position once we like either break down or break up. I think we're just going to break down because the weekly is still on down. So I'm waiting for it to break down from here. And then
they're like the way you're the buddy. Okay. Mm-hmm. Is there like the best? I mean, the best thing is they have all the prints be the same.
Yeah.
And then your stoke and stuff like that be at a certain level, and then it's just a given to make that trade, right?
Yeah.
Without news coming, so without any FOMC. I mean,
that's
when there's nothing going on, you can just basically trade it and feel very confident with that. Which
exactly.
I kind of have that feeling with it. It's just you really have to pay attention to what news is coming up.
Yeah.
Earnings and whatever
and
FOMC is going on.
Those are the big ones for sure. And then sometimes the CPI reports also will get like a reaction from the markets, even though I feel like they shouldn't have that much bearing on them.
Yeah, like today it came out, it was below expectations. I feel like, and like it beat But tomorrow we have FOMC. I think the market is like.
I think we're going to see
Yes.
a rate increase.
Oh,
Two
Pete's phone died.
I think we're going to see a rate
But-
increase tomorrow, though, right? 2.5 points, I think.
Yeah, I think they might. I think the market is expecting it to be the last sort of.
I think that's the thing. I think if Jerome Powell comes out tomorrow and says like unambiguously that this is the last rate increase currently, then that could actually rally the market a little bit.
Yeah,
But I've heard that murmurings too, that people are expecting this to be the last rate increase, which doesn't really make sense to me.
right. But I think like it's not really going to affect crypto markets because like
No.
I think the correlation has like stopped ever since the SPY. Like we got a bull print on the weekly with the SPY. Basically, ever since like we saw a bottom of the market on the SPY, like I feel like crypto has stopped being like correlated.
Yeah, they definitely. It does seem like crypto's back into its old cycles.
Yeah, cycle.
Like I think we have like between 6 months and 12 months of bear market left in crypto before we should see that cycle flip. That's also helping me be a little bit more confident in my short sells. You know, I think it's a little early to call the bottom here for crypto. Although,
yeah, totally.
Who knows? I mean, if the
I think we're gonna like. I mean, I think like because like looking at like 2019 or like any other sort of like, or even before that, you know.
Yeah.
You always get this, and this is where we are in this like pre-pump, hit resistance, same thing.
Oh yeah. And then it like kind of that's kind of where I'm thinking too. I think we're gonna pull back again to like 17,000 for Bitcoin there. I think just maybe like, around exactly like around the same level as before. Like, probably not much lower. That's basically what you've drawn out there is kind of what I'm expecting too. Like, I think like, over the next 12 months or so.
Yeah, because next April is when the next halving is gonna happen. And then halving happens, and then like we start going up.
Yeah,
I think like this is, you know, this chop period is going to be like really annoying.
Yeah, I think though I've said this before a few times, but I'll say it one more time. I think the bottom of the bear market is when you're in crypto, like in crypto chats or in like crypto forums, and like the suicide hotline is pinned to the top of the forum. Like as savage as that sounds, the market's not over. Like the bottoms aren't in until everybody's like, fuck crypto. Like this is all fucked. Like everything's
we're
over.
All doomed.
There's too much optimism still, and too many people are like, oh, it's a buying opportunity. If you see people talking about it's a good buying opportunity still, as far as like in like general chat forums and stuff, it's still too early, in my opinion. I feel like once those chats are like, oh, this is over, the experiment has failed, that's when I'm like, oh, time to buy. Like,
right.
Like I bought last time when we dumped, I bought at like 6K, and then it dropped to 3, and I was just like, oh well, at 3K people were. I bought more because I was like, oh shit, like people are furious. Like I bought 6K to sell it at 10K. Like that hasn't changed. Now it's just half price. But most people aren't trading with that long-term conviction either, though.
Last time I went all in basically when I saw the month turn bull. That's like that's true. That's never been wrong. That's like even if you don't know much TA and you're not like good with marking out like your SR levels, like an easy thing to do is just like wait for the monthly to turn bull with the buddy. And so even if we like get like a dip, it's still not gonna like change the bullish trend.
Yeah,
just like bag hold it and keep adding on every dip.
Check my screen really quick. I just the thing loaded, and here I'll pull it up. I added some liquidity to this position here, so you can see now I have what is that? My balance of $4,600 I added to here, and since I added that, like while we were talking a minute ago, like I could already claim 1 cent worth of yield, and it's still the
free
same.
Money.
It's better than it just sitting there. So Now I'm,
Right.
and then now if I go back to my GMX, you can see I still have 715 USDC, 400 DAI, and 3 forex. I still have enough money to like take some leveraged swings for the next few hours or days or whatever. And then whenever I'm ready to pull out, I can just come here, say minus, and pull back my liquidity, confirm, and then unwrap it, and I'll get back my USDC and my forex. Which again, like I showed you, ODOS here. I can swap forex like into USDC, and it'll probably be at a win. Like once I do, like I have $2,400. It'll probably give me more than $2,400. Not this time. Oh, it's all
Usually
going through
does.
Arbitrum. Yeah, but if I went the other way, for example, $2,400 in this direction, I'm pretty sure this is going to give me there you go, $1.50 like arbitrage, and it's doing that by splitting this trade into this crazy route. Really, really cool trade router. This is probably one of my favorites for swapping.
Nice.
I guess I'll have to see what Uniswap V4 liquidity is all about, but for now, I'm still using this for almost all my trades, my spot trades, my swaps. And then let's see. And then here we can see, oh, look, the open position down 31 cents at the moment, but we still have quite a bit of room to go up before I increase the short. And then if we continue to push up beyond that, we'll see if I hit my stop or if I am able to average down the short and then ride us down. So I'll keep it posted here in Discord, but I think I'm down to do some more like live trades and stuff. I like doing this. This is fun. But yeah, what do you think, Sid? I covered everything we kind of wanted to. I think we did.
I think that was basically it. I think the last thing was like, I think show gains. Maybe just do it. You could open or a show on gains. Maybe open a position or something.
Yeah. Okay. Here, I'll show.
I think that's basically the last thing, and then I think we got
wind this
5 minutes.
Okay, I'll do a gains trade here. So my issue with gains is that it does have a limit or a minimum, so I have to take a kind of a bigger position than I want to. But let's do Bitcoin. And what do you think? Should I still go long on this one? I have my short over here, but I don't think I can do I guess I could do a short with $25. It'll just have to be lots of leverage. So do $25, and then let's see, position size, see right here, I have to do at least $7,500.
So that would be $50.
So I have to go 50. Yeah, 50, and then I can, I have to go 50 with 150x.
Yeah.
Damn.
That's what I've been doing.
Damn. All right, fuck it. Let's try it.
For the quick scalping things that I've been doing, I just crank it up all the way to max.
Liquidation at 26, 122. 122. Okay. I'll say, like, you know what? Close me out at 26.40 is what I'm going to say. So I'm going to say stop loss here. I can set that 26.040. So you can see that will become a 42% loss if I get stopped. And then I am just going to say 900% for this. So I'll take profit at 24.4. So I'd make $450 on this if my take profit goes. So now I can just say market short. It's popping up MetaMask, which I know it doesn't come up here on the screen share. I'm going to take into my hand here my my hardware wallet. And I'm going to punch back in my... I have it has like a pin phrase that it resets every time I don't use it for too long. So I got to actually enter that in. Okay, so I'm going to say confirm on MetaMask. I'm going to open my hardware wallet, and I'm going to confirm on the hardware wallet. And then here's how it looks on Gains Network. Once I've made the trade, you can see the trade pops up straight away. Short positions opened. Right away, I'm 18% in the negative. Part of that has to do
because of the spread, right?
Yeah, part of that has to do with the spread. Had I used a limit order, I wouldn't be quite as in the negative, but I'm also paying fees and the fees are immediately lessed out of this. So you can see the fees are $6 for this position. So $6.70 is 15%. So I'm immediately paying like 14.5% to open a position like this. And the reason that it's so high is because I'm using 150x leverage. I could use literally 2x leverage if I had the counterpart liquidity, and then it would be fine. But here you can see it now changing in real time. You can see this little red bar is where my stop loss is. The blue one is my liquidation price. And something really cool about the way that this this DApp lets me adjust my prices is that, see, now that we're climbing here, I could be like, uh-oh, I don't want to get stopped just yet. And I could literally move this like drag and drop style. Like if I move it, let's say I'll move it right here. If I drop
like that
it
a lot about it.
and that
That's
pops
really
up,
cool.
I know you can't see it on my screen share, unfortunately, but it pops up my confirm, like basically the MetaMask asking me to confirm. And so all I need to do is like sign the confirm and then you'll see here, boom, stop loss adjusted. So it'll actually move just based on dragging and dropping, which again, like I'm waiting for this price to fall below my entry price. So once I'm in profit here, I'll grab my stop loss and I'll slide it down, maybe somewhere around here or so, hopefully. And then when right now it says I can't because it's below the market price, but that's what I will do. So you can see I'm down 24%. It's very quick when you're using 150x leverage. And you're paying network gas fees. So that is part of what I like about DYDX, which we didn't really show off today, is that it does not require gas fees. Let me use my VPN. So here it says I can't use it from here, but if I refresh after turning my VPN on, this message will go away. So once that's gone, VPN's a little slower. But here you can see that, like if I'm short on this one right now. Both of these positions are short. This one I'm actually earning. So the realized P&L, this is my funding fees. I'm being paid funding fees right now. Algorand, I'm paying funding fees, and more people are short Algorand than they are long. But for example, I can do the same thing we were doing over on gains here. So I can come here, choose Bitcoin, look at it at like let's go to the 15-minute. Zoom in a little bit here, and then I could very easily take positions here. Like let's say I'll do should go long or short on this one, so buy or sell. I'll do a long for this one. Actually, I don't know, I'm short is my kind of direction of choice at the moment. Here's the short on this one, so we're actually, no, I think I'm already short on both of these, aren't I? Okay, I'll go long on DYX just really quick here at the end. So we'll do a buy, and I can say in terms of US dollars, I want $25 long. Or let's see, on these other positions, what I did was 7,500. So it would be this, and I would do a market. So market buy 7,000, so that'd be 0.288. That's the same amount of Bitcoin that I've short sold here. But let's not do that much. That's insane. I'm just gonna do $25 really quick. We'll do a long of $25. It's just a market order. I'm gonna say place. Boom. I am now long $25. You can see because it's $25 and my total value in this account is 3,000. I'm only using 0.01x leverage, so almost no leverage at all. My liquidation price is non-existent. So if I go to portfolio, you can see here it'll show your liquidation price, and the Oracle is the current spot price. You can see there is no liquidation price for Bitcoin because I don't have enough leverage to be liquidated, and the current spot price is there. You can see I'm down 0.1%, and then even here, what I can do is create limit orders. By setting this to limit and placing limit orders. So if I want to, for example, sell the amount that I just made, and I want to sell it at, like a similar price as what we thought where our support was, so 26,050, I can then say sell. I want to sell here we go. I have this amount of Bitcoin, 0.00001. So I'll say I want to sell 001. I want to sell it at 26,050. And I'm going to say place limit order. And there you go. So now I have a limit order. If the price climbs to here, my order will sell. And then in exchange for supplying these orders to this market by putting up this liquidity, I'm actually being paid, unlike on CAP where I'm getting paid ARB tokens up here. On DYDX, I'm getting paid these DYDX tokens. So in exchange for putting up $48 worth of fees that I've paid, I'm going to get paid out 48 of these tokens by the end of the epoch. And you can see last epoch, I paid $139 in fees, and I ended up making 58 of these tokens, which I think they're worth close to $2. So it covered the cost of my fees. Like, not bad. And then when I go to portfolio, you can see here, all of my positions are cross market liquidity. So basically,
cross margin.
Yeah, the margin is cross. So like the margin I'm using to short the Solana and the Algorand position is the same margin I'm using to long Bitcoin. So it is possible using this app to, hedge your shorts with a long position or create short sells that earn funding fees over time, and then, close those short sells like later or keep them collateralized against long positions. There's a lot of ways to use this application, but it's as you saw when I made my orders, all I'm doing is clicking. I'm not having to sign anything from my wallet, and so there is no transaction cost for doing any of these transactions. And then the fees themselves are, right now I'm paying 0.2% as a maker and 0.5% as a taker. It's really reasonable fees. And again, you probably notice here, there's no fee at all for your first $100,000 worth of trading every 30 days. So that actually resets. So if I stopped trading for 30 days, I would actually drop back down to 0 fees. But I put up a shit ton of liquidity. I put up a bunch of volume. So I'm almost over $500,000 in the last month. So I get a higher fee structure, but I also get kickbacks in these tokens. So pretty cool. This, by the way, this one is the number one as far as the most volume and the most liquidity. So you can see in the last 20
on Ethereum chain though. So
yeah, it is on Ethereum. So the last 24 hours, it did $1.4 billion in volume in 24 hours. So like, this is absurd. Like, so this is by far the biggest of these protocols. Really, really easy to use. You do need a VPN. And then in order to fund this, you would connect your wallet up here, like I've connected my MetaMask wallet. And then again, you'd be in MetaMask. You'd want to be on the Ethereum mainnet, because that's where the actual money comes from. And then to deposit into your account, you just go down here, deposit, and then you can see if you deposit. Here's free deposits at $1,000. So if you have 1,000 USDC in your wallet, you can deposit that for free into this protocol. So there won't be any transaction fees, which is great because Ethereum transaction fees are pretty pricey. So you could end up spending, like I think I've spent like $16 before to do a transaction that's similarly complicated as depositing into a smart contract. So that's really nice. They pay for the fee if you meet their threshold. Currently it's 1,000. When I first did this, it was 500, but like you see, I funded my account with I think $2,400 or something. Let's see, when I started.
Yeah, you're up.
Yeah, so I started. Nice. I funded with 2,200. So I started 2,200, and then I'm up 35% now, and that's on top of also earning these rewards and all that stuff. And again, this is really simple. Setting limits, setting stops, and then you can even see if I go to my trade, I have quite a few limit orders set. If I go to Ethereum, I'm going to go to like the 1 day, for example. And then, you can see here at the very top of the range, I have a few limit orders to sell. And then near the bottom here, I have a few orders to buy Ethereum. So I start buying Ethereum at $1,150. Like, no questions asked, I'm buying at these prices. These are great prices. But in the meantime, I might open and close positions as well once the market starts moving. Right now, I just have these positions open, waiting to buy, waiting to sell, and you can see here open orders. They're going to be good for 4 weeks. I guess they're down to 2 weeks now because I placed them a while ago. So once those cancel, I'll just reset them. No cost to broadcast orders. No, it doesn't cost anything to close orders either. Like for example, if I want to close this position, like here, I no longer want to buy at 1915. Close. And it's gone, cleared out, done. Like I don't have to pay anything for that. It's really, really easy to use. Big fan of this one. But yeah, I'm down to do this a little bit more often too. Like jump back in, show off some.
Is that everything?
I'd also like to do this. It'd be fun to do this to like show off some of the DeFi protocols. Like, I mean, you saw me kind of very quickly add liquidity to to an LP here, which it's not showing up because I'm not on the right network. If I come back to this network, I can get a staked only, and then there you go. So you see I have $4,634 worth of liquidity, and it's already made me 2 cents since I added that. And there's lots of opportunities like that out there. I'd love to go over those kind of like, in a stream like this. I feel like it's really, really, it's kind of a complicated topic, but it's really straightforward once you get it. So yeah, hopefully this kind of helped some people understand. And we're going to post this on like YouTube and stuff to get like a little bit of a live, or like a little people who maybe missed this one, because I know Lance was interested in seeing it too. Yeah.
Nice.
But sweet. Thank you guys. Thanks for joining us.
Yeah.
We'll definitely do that again. But until next time, I'm Max.
Yep.
I really like your who's this? I really like this the dog icon you have here. I'm trying to see your name. I just see J ... But I like
JDM Bird 1.
I like your profile pic. That's fun. I'm a big fan.
NFT.
I'm a big fan of these like profile pictures. NFT. I don't know. I hope it is. If it is, I'd be collecting those the cool dog pictures. That's great. But yeah, we'll see you guys in Discord and back around here. But I'm gonna be monitoring this trade that we just opened. We're back down right now. Let's see if I look at gains. Here, let me. Oh yeah, I'm still sharing my screen. So you can see I'm back at like 11%. Like this is volatile. We have set our stop. It didn't hit. We might be pushing back down now and maybe be getting into profit soon. Who knows? But I will post how it goes for both gains and for our GMX. You can see GMX also had a similar run up and down. And again, I chose to go short because of the weekly, daily, and 4-hour charts. Once we got to the 1 hour and the 15-minute, it looked like maybe we'd get a little bit of a retest bounce. So I decided to use that bounce to average into a short position because I'm trying to keep these positions open for more than a few minutes. And I'll let you know how it goes.
All right.
Good shit, guys. See you next time.
See you next time.